no sense whatsoever. I wonder what Nischal Maheshwari has to say about that. He's joining us right now. Nischal, thanks so much for taking the time. And as we speak right now, the Nifty IT is off the low point of the day to the extent of close to 1,200 points. And a few of those IT stocks are now seeing gains as opposed to sharp cuts. Do you agree with what Moshe Khatri was saying, that perhaps to a certain extent this has been overdone?
Afternoon, Alex, and to you and your viewers. I think jury is still out, basically, whether we have hit the bottom of the IT issue or not. But having said that, I think the market is driven by greed and fear, and at the moment, basically, what you are seeing is the fear. And when you have these kind of emotions, basically, market tends to overdo it, and I think that's what has happened today. But it doesn't mean that IT is out of the woods, then this is the bottom of the sector. I still believe basically there are issues which all these companies have to address, and they have to come back with a growth plan, which at the moment I don't see most of them having it, and that's why I think the market is really worried, and that's why at all higher levels you will continue to see selling happening.
Now, the way that things, and you aptly described it, the market is about greed and fear is evident, at least it was earlier today, and seemingly some people are attempting to bottom fish. Those multiples have declined quite sharply in the recent past. So therefore, in that context, Nischal, people are arguing that you should look at it in terms of PEG ratios, and you shouldn't have ratios of more than 2.5 to 3, which would pull down the effective multiples on the price to earnings front to about 12 to 13 or 15 at the most, which is significantly lower than what we're seeing right now as well, at 18 to 20 or thereabouts for several large IT companies. So from that lens, more downside is possible?
PEG of 2.5 times is really very aggressive number. I would actually, given that these are very, very hugely cash generating companies, I would actually put a DCF to them and try and see basically what kind of valuations are working. Now, what has happened is today there is a report out by one of the broking firms basically where they have cut down the terminal growth number. So typically most of the analysts do a 5% kind of a perpetual growth. I think that number has been cut down to 1 and 2%. And in that kind of scenario, I think their DCS will all come down. And that's why I think market is worried and wants to get out in a hurry. But I do agree with Moshe Khatri earlier, basically, that jury is still out. We do not know basically that how this whole thing is going to pan out. And one thing which is the silver lining here is basically that somebody has to convert all this, right? It has to become a use case. You can't use AI generally by any company. Somebody has to convert it into a usable thing. And I think that's where the Indian companies fit in. Now, till we get that visibility, basically, that what and how it's going to get driven, I think that's where the uncertainty is there in the market, and that will continue to impact the stock prices.
Yeah, well put. By the way, the IT index, even as we're speaking, is climbing. So somebody is listening to what you're saying, Nischal, and it's now down just about 1% or thereabouts. So, but I do want to talk to you about Bajaj Finance. Allow me to play a certain clip from the recent conference call, because this relates to the use of artificial intelligence. In fact, they're using, I know that a lot of you will have listened to some of these calls and would have said that we don't like listening to the calls that Bajaj Finance sometimes sends out. And I must confess that I haven't got them in a while, which means that they're not out to sell me anything. But having said that, this is what Rajiv Jain has to say. He's speaking about how artificial intelligence is being leveraged to get these calls out, these customer calls out. And the lender's already run 20 million calls. It's ramping that up as well. So think about this from the perspective of productivity gains for this company. It's quite considerable. Listen in.
AI listened to 20 million calls and converted voice to text and gave us data. text to data conversion happened for 5.2 lakh customers, and as a result of that, we generated 100,000 new offers on which we did not have information earlier. So that's the way, and how you're seeing it move, that the first capability did not exist in Q1 and Q2, it just got deployed. So we'll be able to listen to 100 million coins next year.
Okay. All right. So that's the word coming from the management of Bajaj Finance, which, by the way, is trading with gains of about 0.8% in a pretty woeful setup for the equity market. So stocks that are doing well today, you should take note of them. Nischal, comment on Bajaj Finance as you see it. And as you've said, jury's out. We'll have to see how applications are made. But seemingly, they're changing their model to having less of human interface with potential customers, and I wonder what the conversion there is. And I think that what they were saying with regard to the usage of the data is very critical, because as a lender, they're going to go through what they collect and they're going to decide whether there is credit worthiness. How do you read Bajaj Finance's moves in the recent past?
So I think Bajaj has been known for using technology, and I think they were the first guys in the street actually and I remember one presentation which Rajiv made, I think maybe several years back basically, and most of the analysts came out and said that it's more of an IT company rather than actually a finance company. So they have been extremely smart in using the technology, and they are ahead of the whole market, and again, they have proven that they are ahead of the market. Now, the one thing point which I want to make is basically Bajaj is also utilized to create this use case, right? They are now saying that they will listen to 100 million calls next year. Now, somebody has created this use case for them. And that's what I'm saying. Basically, these IT companies are supposed to be doing that part. Somebody is going to make this AI useful to the end customer. And that is the job of the Indian IT companies. They have the scale, they have the skill. So I'm very sure basically these companies will find a way out, except for at the moment there is a huge amount of uncertainty and fear. And that's why you are seeing this kind of a scenario.
So I want to shift gears, Nischal. I want to talk about Hindalco, which is losing ground a little bit at this point. And some might argue on expected lines, because there is an impact of the fire that Novelis had to deal with. And there is a one-time hit. It has been estimated at 2,610 crore rupees. But there's also a concern about the increased leverage for Novelis and the rise in net debt to equity and the uncertainty about when this issue is going to be resolved. So the implications for cash flows worse than was previously penciled in. 5% lower or more right now. I've had one commentator, Nischal, talk about that 900 level, not from a technical perspective, but from a fundamental valuation perspective that makes it look attractive at that point. Do you agree? Do you concur? How do you look at the prospects for Hindalco?
So I do not cover Hindalco per se, basically, but what my worry remains to be, if I remember it right, I think this is the third or fourth accident which I think Novelis is having there. And that's my worry, basically, that what is really happening. Every 6 months you have an accident, either fire or something else. That's a sort of a worry for the industry. Otherwise, for Hindalco, but otherwise, what I see here is basically that the metal rally has played out well. Hindalco has also played out well. I think at the moment it's a best avoid kind of a situation as far as metals is concerned.
Got it. All right. Nischal, quick question. And as you see the texture of the market right now, we're nearing the end of the third quarter results. What have you seen that is absolutely got you excited after this results season? Stock-wise.
So I think
Stock-wise, I'm not talking about a general question. Stock-wise, what stock earnings did you see or sector earnings did you see that made you excited?
So earnings may not have come out very different from what was the expectation, but I'm saying we as analysts actually look at more of what kind of commentary the managements have made, and that gets the market excited more, saying that yeah, the visibility and all, and if the credibility of the management is high, then obviously people tend to believe it. And I think one of the sectors basically which across the sector, most of the companies have made a good commentary and the order books are strong is the power sector basically.
Need to come
There,
back to you on that one. Nischal, apologies. It's we're running out of time because we have to go to the management or loop in. So I will delve deeper into that at a later stage. But thank you so much for taking the time.
Thank you. Welcome.